Imagine watching Nvidia, the undisputed champion of AI stocks, suddenly stumble after a monster 600% run. The stock that seemed unstoppable is now showing signs of weakness. What does this mean for you as a trader or investor? The daily chart shows momentum shifting to the bears, but zoom out to the long-term monthly chart and you'll see a completely different picture. Welcome to our powerful technical analysis of Nvidia's recent 35% correction. We're about to reveal our expert take on what this means for the future of this AI leader, using daily, weekly, and monthly charts. I'm Darren Wagner, founder of Morpheus Trading Group, and today we're joined by our head stock analyst, Rick Petticelli. With over 20 years of market experience, Rick will walk you through the significance of key moving averages across multiple time frames, how to interpret Nvidia's recent correction in context, what the potential left side of the base means for traders, and why the monthly 8 EMA could be crucial for long-term investors. If you're ready to learn how to navigate these complex market conditions and take your trading to the next level, press that like button and subscribe now.
Thank you, Darren, for the introduction. So let's dive right into our analysis of the current market position of Nvidia using the daily, weekly, and monthly charts. First up, we just want to say that we consider Nvidia to be a market leader within the AI space, obviously, and probably the number one stock in the market, especially given its monster run up over the past few years since it broke its downtrend line in January 2023, broke out from a cup pattern here and rallied probably over 600% or so over the past few years. So just a monster move. So with Nvidia being the biggest top dog in the market, it's important to keep a close watch on the price action and see what it's up to, as it can offer some clues where the market is headed. So let's go to the daily chart to see what's going on in the short to intermediate term time frame. And for the short term time frame, we use the 10 and 20-day moving averages. And for more of the intermediate, we use the 50-day MA, which is the red line. And if you note here, generally speaking, when the price is above the 20-day EMA and the 20 is above the 50 and the 200, you have a strong uptrend. And that's where the easy money is made. So that's our short-term uptrend, really. And I'm calling it short-term, but maybe it's intermediate term. It's just where the easy money is on the upside. Once you break the 20, we have more of an intermediate term time frame where you're probably not using the 20-day EMA to manage your trade. You're probably using a combination of maybe the 50 and maybe even the 10-week on the weekly or the 200-day moving average on the daily. And if we're just strictly using the 200-day moving average, we're really a long-term trader here, and we're just following the 200-day MA and not really taking any signals off of the 20 or the 50. So with that said, we have Nvidia after a prolonged advance. So this is a 350 bar advance, which is roughly 16 months long. So just an impressive run up. And so obviously it's not the first or second base, and we're getting a little later into the move. So there was a push out and then a failed breakout, and the price action rolled over, testing the original breakout here. And that's where our initial support level is here. And that's where a strong uptrend, if it's going to pull back, should find some support there at the highs of the last base. When there is a deeper correction, most of the time you're going to have price action base out, move higher, then base out and then move higher. There shouldn't be a full retrace of the last breakout attempt. But we do have that now in Nvidia where the price action has pulled back to the last breakout, which is support for now. But in the short and intermediate term, we have the price action losing the 20-day EMA, and we have the price action losing the 50. Now, it did lose the 50-day MA back in here, but quickly reclaimed the 50. Lost the 50 MA again, didn't set a new low though, and regained the 50. Lost the 50 again down here, undercut the range lows, but just for a day, and then bounced back and then made its move up. We have sort of the same situation here in April where the price action lost the 20 and the 50, recovered fairly quickly though. We have a bit of a change of character now in that price action lost the 50. Now it's setting lower lows and lower highs below the 50, and the price hasn't recovered back above. And the price action is broken down below prior support, where in this case it's holding on to prior support. And over here there was a 1-day undercut of support with the price action ripping right back up. So we have our change of character here. Nvidia is going through a deeper correction, and that's also reflected in the percent pullback off the high. Here we have roughly 21%. Over here is a again, roughly 21%. And now the final pullback here, or this last pullback, is 35%. So a deeper pullback, but that makes sense given the powerful advance, 16 months long, which makes sense though after a prolonged advance, a 600% move in a mega cap name needs to take a break. That's fine. So short and intermediate term time frame, we have sell signals in place, but we do have the 200-day MA, which is in an uptrend and is yet to provide support during the current rally attempt. So our thought process here is that we're likely to see at least one pullback to the 200-day MA before this run is over. So the first time Nvidia does touch the 200, we should see the price action bounce off that level and eventually push higher. Now, that's just what we're anticipating. Obviously, anything can happen. Nvidia could have put in its ultimate high here for the next year or two. Who knows? Price action could roll over, do whatever it wants. So that's what we're looking for, is for the 200-day MA to provide support, since it is the first touch in a strong uptrend, or it could be the first touch. Now, going to the weekly chart, which is really just going to confirm our analysis on the daily. We just have the 10 and 40 week MAs here, and we have this strong uptrend in place. And then we have each breakout working, and now we have a failed breakout, or should say the breakout worked, but there's a round trip back to the breakout level. Now, up until July, there was no true sell signal in Nvidia. Even on this week, as it broke down below the 10-week MA, volume was higher than average, but not by too much. But that could have been a difficult week to sit through. So that may have forced people to exit, but one could have easily re-entered here and participate on the last move up. But as you can see here on the weekly chart, we are breaking down on the weekly with the price action below the 10-week MA, and the 10-week MA starting to curl or turn down here to curl lower, which happened for a few weeks in here in July of 2023. Not so much since then. So possibly a sign to that a change of character here for the weekly chart, which is already price-wise showing a change of character. But again, like as we saw on the daily chart with the 200-day moving average in a strong uptrend, the same goes for the 40-week MA, which is sort of like the 200 on the daily, which is in a strong uptrend. And as we mentioned earlier, should provide support on the first touch of the 40 if there is a touch. And so far, we're seeing a pretty big reversal this week in Nvidia. So if the price holds up and chops around for a few weeks, we could see the first touch of the 40-week MA be a bit higher than if the price were to just roll over this week, where the price would touch possibly 40% off the highs. That first touch, if the price action holds up here, could be closer to 35% and not necessarily have to set a lower low, though anything can happen. So what we're really looking at is just a chart that's broken on the weekly, and now we'll need some time to repair. And, so far it's doing that with a 35% correction over 8 weeks. And we would call this the left side of the base that's potentially forming here. Then we have a sideways action to bottom the base out. That could be an undercut of this low or not. And then you have the price breaking a downtrend line and eventually pushing higher to form the right side of the pattern. Let's switch over to the monthly chart where we have the 8-month moving average here. This is an EMA. And what we like to note is that the price action in a strong uptrend holds above the 8 EMA nicely. And it did so in the 20 to 22 run. So the price just touched the 8-week MA this month and bounced off that level. So we're looking for a few more weeks of sideways action, and then for the price action to tighten up from here and then push higher. Now, given that the last advance was 500-600%, it could mean that Nvidia might need another month or two to chop around before it can push higher, or maybe even more than that. We don't know that Nvidia necessarily has to be a leading stock during the next market rally. It may simply need more time to go sideways and then resume its leadership in 2025. I don't know that that'll happen, just laying out a few scenarios here. But what we are looking for is for the price action to hold up above this 100 level with some wiggle room down to 92. And that would allow the price action to hold the 8-month EMA on the monthly, and with some time could allow the 40-week MA to also catch up to the 100 level on the weekly chart. Of course, now if the price action breaks down below the 40-week MA, the next support level we'd look to is an undercut of this, the prior base here at around 73. That would be the next big spot to look for support. So there you have it. While Nvidia is broken on the daily and weekly charts, it's below the 50 MA and the 10-week MA on the weekly. The price action is still above the 200-day MA on the daily and the 40-week on the weekly, which is what we're looking at right here. So it's still in a long-term uptrend, which for investors and longer-term traders is a good sign. This is still constructive price action in our view. So for the short to intermediate-term trader, there's really not much to do with Nvidia, as it's below the 50-day MA, below downtrend line, and not really setting higher lows on the daily chart yet. As for the longer term trader, maybe the first touch of the 40-week MA could be a lower risk spot to enter. But aside from that, maybe one could attempt to take on a little bit of size at support at 95, looking for the 72 area to hold up if you're really a longer term player. But that's a pretty wide stop. What we do is more in line with the short to intermediate term time frame. So we're likely waiting for the price action to set higher lows and to push back above the 10-week MA before we entertain a new position. Before we wrap up, we want to hear from you traders. What's your take on NVIDIA's recent action? Are you bullish or bearish on the AI stocks right now? Drop your thoughts in the comments below. Your perspective could help fellow traders. Before you go, make sure you watch these 2 handpicked videos on your screen. They're your blueprint for identifying high probability setups and trending stocks like NVIDIA. We'll see you in the next video. Until then, remember to trade what you see, not what you think.